I'm cautious heading into the quarter. We expect about a $3 loss, which is worse than consensus. And I do agree with Phil. I think cash burn is a very important factor in the quarter. I mean, if they're burning at $1 billion rate, we think it'll be about $900 million for this quarter. That raises concerns about the need for a future capital raise, which they claim they don't need to do.
Do you think that they are producing 5,000 Model 3 cars a week right now?
I think if you look at the exit rate, the last quarter it wasn't sustainable, so I'm skeptical that they maintain that rate. I also don't know that that's the question we should be totally focused on. I think it's going to be important to realize, what is the price point, which actually might be a thing that helps skew profits in Q3, and also the quality issues of the vehicle and the profitability that's sustainable of the vehicle are actually far more important than getting more out if you're not selling quality vehicles that are profitable.
How concerned have you been about these reports, even the most recent ones, about them bringing in extra hands, what that's done on the other side to their ability to service current Tesla customers, et cetera?
I think it's extremely concerning. I think it's definitely going to be a factor in the quarter in terms of fixed cost absorption. It's going to be hard when you're bringing all that cost in to actually report profitable results, which is one reason why we're cautious in the quarter. And I do think from a servicing side, which hopefully is a different group of people, if you're not getting your vehicle serviced and you're paying a plus $50,000 price point, that's clearly going to disappoint customers.
Colin, what do you make of the fact that people are talking about how you can go online right now, you can put in an order, you don't have to kind of wait in line? What happened to that kind of big queue that was set up there of people who had put in deposits? Have a lot of them been canceled?
Yeah, this is something we recently talked about in a recent report is, I think there's a strategy into the third quarter. We actually do believe that they'll actually have a profit in the third quarter because when you go online today, you could only configure a model that's $49,000 or more. I think the most expensive is $80,000 for this vehicle. And at that price point, at that very, very high price point, which we don't think is sustainable, I actually think they'll temporarily generate a profit in Q3 before things correct and normalize in the fourth and probably into 2019. It gets pretty rough because you pulled forward some pretty high-paying customers. But I think that's the part of the strategy. And then they are definitely cutting people who wanted a $35,000 model. Those people are not going to be able to get the $7,500 credit because that'll start to expire, or many of them won't. So I think that's kind of disappointing for those customers.
And then just tonally, and I only mentioned because the last conference call with investors and analysts turned into the news event in terms of what Elon Musk said. It wasn't even about the numbers, it was about the outburst. How important is that going to be?
I think it's very important. This company is going through a very important transition. It's going to its first, close to mass market priced vehicle. This is supposed to be the volume vehicle. They've had significant production ramp issues, and they want to see a CEO who's more level-headed, and I think that's what he needs to kind of portray today.